Hi all, welcome back to ThreeD Capital, a merchant bank that gives investors significant diversified exposure to early stage growth companies that most cannot even touch. ThreeD is like an ETF for disruptive companies, a basket of investments in one place. To get exposure or invest in these companies mentioned on the channel, it is typically only possible by buying ThreeD Capital shares who have purchased founder shares in these companies often 5 to 10 years ago. We've now interviewed a number of portfolio companies. Sheldon, the CEO, has described these companies as their children, who they care for deeply, which are now maturing and commercializing after that long 5 to 10 years. We thought it would be very good for viewers to have an update since the last interview of Sheldon on this channel, which you can see linked here if you haven't been able to watch that. I thought it would be really good to get to know Sheldon on a personal level, whilst also updating on some business developments. How are you doing, Sheldon? Been anywhere nice recently or soon?
Hi, Hector. Glad to be back. No, been pretty well grinding away this summer.
Yeah. No, it's same on this end as well, but it's very important to get that time off as well. What are your morals in regards to life, and how do you want to be remembered?
Oh, wow, that's a big question. You know, I give away most of the money I make, so I believe in helping others. The companies I build, I like other people to win as well as 3D, so you have somebody you can celebrate with. And when I had Pine Tree Capital, probably more people bought their first home than in any other company because of the rise. So I was very happy for them. And yeah, I just believe, those who are committed to stay the course, I think are going to be rewarded very deeply and robustly. And that makes me happy.
How do you want to help the average investor who can't touch what you guys can invest in?
Yeah, so we have a very substantial deal flow, and people recognize the fact that we get involved at the earliest stage. So most people will consider it to be the riskiest, but I'm very value driven. So I want to get involved, not founder shares very rarely, but certainly seed, where we're the first investor, often the most significant investor, and then we help build those companies. We monitor them, we add value, we create partnership. So investors get a window into this where, in most cases, they probably wouldn't discover the companies on their own.
And plus,
or have access to investing in.
Yeah, and I guess they also get your brain and your track record as an eye going in, rather than them having to make the decisions themselves as well, if they obviously trust your picks. Going back a bit to the bit on the past again, just some more entertaining questions. What was it like being Ernst and Young entrepreneur finalist? Who was on the ticket with you? I saw a really good article.
There was a winner, a multi-billion-dollar company. I kind of thought that, it was a more advanced company. I kind of changed my shareholder return much more than they did, and they were just a single owner, but it was a builder. And then Cirque du Soleil had won the previous year, Quebec company that, is obviously turned into be a major entertainment company. And so anyway, it was just nice to be recognized and picked for nomination.
And it sounds like everyone that was there has moved on to do great things as well. So
yeah, for sure.
And when you met Warren Buffett, do you remember any words that were exchanged, particularly between the two of you?
No, I mean, basically, it was just, great to meet you. I'm not going to, start asking him for investment advice, but it was very nice and, very accommodative. And, I forget exactly what we chatted about, and then to be photographed. So it was nice. And, he's very sincere and normal.
Touch on your love for art, your wife, and the Lynn Factor for social work for kids that you've done in the past.
Yeah, so she's an extremely decorated person, received the Order of Canada, the highest order, and the Order of Ontario for her work in social work. We endowed the School of Social Work at the University of Toronto. Nobody from social work makes enough money to really give back. So I felt that, that was the underdog. It's, they're the frontline workers, the first ones to go out and have to deal with the most challenging situations. And, as a result of us supporting the school, which is the University of Toronto, it's now become the #1 school in Canada, and I think #2 in North America.
Wow, fabulous. That's very impressive. Touching now onto 3D, in the article I read, it was very eye-opening in terms of how the business operates. So how does the business model revolve around trust and risk?
Yeah, so this is a business of people. And people have to deliver, execute, work hard, have a good work ethic, which is not always the case. Sometimes it is at the beginning and it changes, which is human and human nature. But yeah, we have to trust them. And that's why we're milestone investors. So we like to see performance. And as soon as they hit milestones, we're often, we invest more in the company because we understand that they've achieved value added for the shareholders, and we recognize that and continue to support it. And that's a big role that we play.
And then touching more on that, how important and what do you look for in management themselves? It sounds like this is a key element to each investment. And do you meet everyone in person that you invest or work with?
Yeah, we meet everybody in person. And you know what? There's an element of drive that we look for. And in some cases, there's track record to prove that. So it's very important that they have a very strong work ethic.
What concrete reality and evidence do you see or need to see to get involved in a company? Perhaps, give an example, talk about the early days of an investment like Todak, the evidence they provided you 5 to 10 years ago, and now it's really looking like end of this year is going to kick off.
Yeah, so, there's two things. Everybody has a vision. The vision has to really align with my vision. And then secondly, they really need to have a path to execute that makes sense. In some cases, it can be too lofty and, too pie in the sky. And then the things that have to align is the market. The market needs to be ripe for that technology. And in the case of Toda Q, they've actually pivoted from what I originally invested in, but the protocol was the power behind it. It was just a different application, which has become a killer app, which is micropayments. So I believed in the team, Hassan Khan. I believed in the niche or the area that they wanted to get into, and we've supported them for all these years. Yeah.
So back in the early days, was it more the blockchain focus and then realization of that you could do the micropayments, and that was a massive internet, 30-year dream in the making?
Yeah. So. I'm very interested in blockchain and for supply chain and so forth. Cryptocurrencies is a whole separate conversation. And the thing that I liked about Toda Q, which is built on Toda, the protocol, is that blockchain is not a scalable technology because it's consensus mechanism and slow, and you need certain things to happen. This is extremely scalable. And what we're finding out too is the cost per transaction is fractions of a penny. So we believe that it's extremely disruptive, and they've broken this, cycle of blockchain companies trying to be scalable and convince people, and they're not. So this is an outlier that I think is going to be a leader.
Especially when no one else is able to crack it as well, and they have. You once said money is made when one buys. I mean, this might be a decade ago. Does this mean you know how much you've effectively made or will make once a deal or a contract is signed?
No, when I said that is the money is made in the buying, is that if you buy incorrectly, which everybody does at some point, then when things go backwards, you tend to psychologically not want to stay with that investment. It's just human nature. But if you buy right, then, and you're always, the enterprise values continuing to increase because milestones and so forth, then you feel much more comfortable, and your predisposition is to stay with those projects. But listen, easier said than done.
Yeah, for sure. Why don't you think more people or companies get involved in early stage companies when it gives the highest return? And risk can actually be mitigated as you've proven through diversification.
Well, I think everybody likes to have big wins. It's just psychologically, emotionally a great thing. It's nice to be right. And sometimes when these things are right, they can change people's lives. So that's why everybody has an interest in picking those lottery tickets.
Yeah, I agree with that. I mean, I have a feeling of I'd much rather be the first person to do or be involved in something than just to tag along and benefit. I'd rather, being a thought leader, which is obviously what you guys are doing, which is fabulous. And then this is an interesting question. Do you have a role model or a competitor that you really kind of respect? Or when you first started, like way back, did you look up to someone and think that's what I'm going to do?
Not really. I've always been a solo traveler.
Fair enough. Does time in this space and the fact that you work with the actual portfolio companies and help them grow, do you think that gives you an edge over any investor that may put in equal finance? Like what's the edge, do you think, that ThreeD offers?
Absolutely, because when you're in a pulse and you're meeting management, and in some cases those companies are in my office, you really get a pulse, because business is a grind. And how do you stay with that grind when there's no news? So you have to really have the confidence and the predisposition to stay. And so I think that we have an enhanced view of these business models that, basically the average investor just doesn't see.
How do you then influence a portfolio company's destiny then?
Well, we're constantly talking to them. And in many cases, we bring strategic partnerships to the table, which allows them to scale and get to partnerships that they would never get to on their own. So it's very distinct value added for those companies.
In the same way that it's almost like if they were an investor looking at you, they wouldn't be able to access what you can without collaborating with you.
Correct.
How do you keep risk low on a sector by sector basis? Obviously, we've got blockchain, AI, Internet of Things, biotechnology, junior resources. Clearly, each one has different risk and upside management.
Well, risk is always there. You have macro risk and you have micro risk. It's the nature of the beast, and that's why this business is rocket science. It's very difficult to be successful.
Especially, I guess, in the biotech space, for example, there's many more variables, but it's I guess a credit that you've got Jackson with his expertise on board too.
Yeah, and it's also an extremely long road. You have to have a lot of patience.
Yeah. Do you see more upside in certain, even of your 5 sectors that you are looking at? Do you see more upside in one than the other, or do you just, you like you say, you aim for 50x across whatever sector?
Yeah, I mean, for example, I can talk about 2 companies that in the last 60 days represent sort of sectors that perhaps I wasn't involved in or didn't know about previously. One is QIMC, Quebec Innovative Materials, which is a hydrogen play. And that project, sometimes you're holding things for years before they happen. And then suddenly you stumble on something, and based on your historical experience, it converges to a very interesting situation. So I've learned a great deal about natural hydrogen. And we think we have a major discovery in Quebec. And we are the biggest landholder in the province for natural hydrogen. And every week, some major corporation is reaching out and is very interested to talk to the company. So I'm extremely encouraged. And that was not a vertical that we would have talked about 90 days ago. Yeah. So that's very interesting. Another company that you just recently interviewed is a company called Tenant. And basically, they were a company we were involved in a number of years ago at 30 cents, and stock went to $14. And we did very well on. And it was basically a peer-to-peer matching lenders and borrowers. And what they've evolved into now, based on their platform of what's called Cubular, is the data they receive is now letting them, using AI, become a data company where they provide very proprietary information to people that want to buy those data packages, because no one else really has access to the certain data that they have, which is around private SMEs, small business enterprise, small businesses. And so we now believe and are very optimistic of where this company can go. And they've sort of been just unveiling their model. I mean, they still have to obviously get revenue, but it looks like that company could be a big turnaround. And the stock went from $14 to 5 cents. So it came down substantially, primarily because their business was in China. When China hit COVID, the whole business stopped. And you know what? It put them in a hole, and now they're rebuilding. So, that's another, say, vertical that, is it in the AI vertical space as an application, or is it in the data space? Something extreme, kind of new. So we are, we're very positive about the prospects of that company doing a lot better as well. So, this is a changing field.
Yeah, no, and having interviewed all of these companies, well, even that one, for example, I never heard, I wasn't really around back then, and then now I see, okay, wow, this is something that's a blessing for someone like me or someone new looking at 3D in its portfolio can go, okay, well, I'm lucky that I can get in again and potentially see that run. I mean, even with QIMC, I was very frustrated I wasn't able to get in at 3 cents. I was quite busy at the time, and then it went to 19 cents. So you're obviously very good at picking these companies, just to say the least.
Well, you can sort of look at it that at that time, all they had was a property. Now they've been able to do, let's call it surface work through what's called sniffers, and they've discovered hydrogen. So at 15 cents or 14 cents or whatever it is, the risk return is better than it was at 3 cents. So, unless one's a trader, and then that's a whole different ballgame. But we believe this whole play is just beginning.
Yeah, and then when you compare to gold hydrogen, which is 150 million market cap, probably the only competitor in the space in Australia, they've got that market cap, and you guys have, had a 3 million market cap. Now I've got 19 million, 14 million market cap. So you can see how that could still 10x from there easily. So very, very interesting.
Early days.
How do you use a micro picture for micro companies, but then also having a macro view with, black swan events and all this stuff? This is obviously very difficult, but you do a great job.
Well, I always start from the macro side. I create a vision of the future. Where do I think it's going? And then try to position in companies that are best suited or best positioned or have proprietary technology to attack those various verticals in the macro thesis that I develop. And black swan, everybody gets killed by black swan. There's could be wars in the world now. There could be a lot of things that are going on that we just don't know. Government regulation, that you take your hit because you can't predict it. But you do your best. If the company has great management, proprietary technology, and an addressable market that's growing, that interests us. That's our sweet spot.
And would you say even some of your gold projects or like the hydrogen, would that protect even black swan events?
Well, I think diversification is an advantage for us. So, we have AI, we have minerals, we have hydrogen now, we have data companies, we have longevity companies. So, typically black swan just delay the inevitable. They don't kill it.
That's a good point. What advice would you give to your younger self, investors watching this, and even just budding entrepreneurs?
Be very patient. Too many people are impatient. It's a social media, instant gratification world of young people today. Business is a grind. There's no, every so often, something happens quick, but you don't count on that. But if you're not working hard, you can't take advantage of those lucky moments. So just, put your head down, stay with what you believe in, don't take shortcuts, and be honest.
Maybe I should take that advice, because the next question is actually catalysts or any company updates you'd like to give next month or two, 3 months towards the end of the year.
Yeah, we believe in the last quarter of this year, there's going to be a number of catalysts that will be accretive to us. Certain things I thought were going to happen earlier this year. That's the problem with timing. So you have to, that's why I say patience. September to December could be a very good time for us.
I think so as well. I'm looking forward to it. Since we last spoke, ThreeD obviously won a great lawsuit win. It was very impressive. It was equal or it was even slightly greater than your market cap, ignoring your 70 investments. That was very impressive. How was the process of that? And are you happy with the result?
Yeah, you're never totally happy. And, the price of that stock has also declined, which we're not happy with. But yeah, we're moving forward.
And then lastly, where do you see yourself and 3D Capital in 5 years?
Well, I see this becoming a tremendous hit, as successful, if not more, than Pine Tree.
Wow. Okay, that's very exciting for viewers, definitely. Thanks so much for the update, Sheldon, and really looking forward to these next few months.
Thank you, and enjoy the rest of your summer.
You too, you too.